Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, October 25th, 2024. What I'm going to do in this one is kind of do it in reverse. We'll get to the equity markets last. There are some definite things I want to point out there, levels to watch. And I'm going to start out just updating a couple trade ideas. I threw out Tesla yesterday. In that comment, there were under the comment section there were a couple of posts, and I added to that this, and there's a couple other things I want to talk about now. I had a relatively tight stop on it for just a quick pullback trade that was based off the 60-minute chart. So that was hit. I just want to say that I still very, very much like this trade. If you want to know why, you can use that stop if you want. That was for a quick pullback based on this shallow target, just a pullback trade. But bigger picture is this new downtrend line that I added. It's actually has more reactions than the other one. Very, very well defined. Couple other factors to consider. I didn't queue this up. Let me see. I had it pulled up yesterday. Let me just see if I still have the window open. Yeah, there it is. I have right here, go up here, zoom in a little bit. We have the Tesla short interest at by far, not even a close second. You can scroll back all the way to 2023 at the lowest level in a long time. Now, what does that mean? Basically, you don't want to short a stock when short interest is high. You get short squeezes. So that's one thing there. You want to definitely start looking to short when no one else wants to be short, because everyone's. And by the way, this is dated information. Short interest is published bi-monthly, and then the problem with it, even then, it's a 11-day lag time between the time the brokerages report these short interests to the exchange until the dissemination date when it's released to the public. So you can see that's back in September 30th, and Tesla's been climbing, so it only stands a reason you probably see even a lower short interest there. And then the other thing on that is yesterday's move. And let's see, I don't know. You can Google search it or use Perplexity, and I've done this. They talked about it being the biggest move in like the last 10 years. Without fail, and guys, I've been doing this a long time through many market cycles. The biggest gains, maybe with few exceptions, very few exceptions, but generally speaking, the biggest gains in any individual stock or the stock market don't come in bull markets, they come in bear markets. And Tesla's been in a downtrend. So the fact it was up so much yesterday is you don't see that in a bull trend. It's typically bear market action. You can Google search or use Perplexity. It's a better source for things like this. Look at the largest days, daily gains in the NASDAQ 100 or S&P 500, and you'll see they came in bear markets. They came during COVID, that drop off, things like that. And it's just because that's the nature of it. You don't get them in bull trends. But what I can tell you definitively, that's just something that you can't bank on, but it just tends to be true, is this is a very clean downtrend line. This is a daily chart. If it starts walking away and prints a solid daily close, and especially on a weekly closing basis, today's Friday, so unless it closes way up above, you're gonna have to squint to see if it's above it. So I just wanted to point that out, that your downtrend line resistance yesterday was indicative of nothing more than a bear market rally. This is a stock that peaked back in 2021. So trade it as you want. If you want to use that tight stop, the trade officially will be considered stopped. I'm doing this for a lot of people have asked for suggested stops. And I told you I'll use either anywhere from at least a 2-to-1 to a 3-to-1 R. It was a short at the trend line. So based on a 9% drop, I gave it a 3% stop. We're below it now. I also often advise, didn't get so wordy in it yesterday. I like to wait on a 60-minute chart, wait for a 60-minute candlestick close. You got it this morning, but that was actually the first candle is only a 30-minute, so you didn't really get a 60-minute candle close. You're below it now. Either way, take it, don't take it. I just wanted to give you my logic on that and those additional things, the extremely, multi-year low short interest. And this one, again, has huge potential, more so than just the quick pullback trade. That's what I wanted to get out to you based on this. If we get a rejection here at the downtrend line and the bear market resumes, You know, you want to call it semantics, really, if you want to call it a bear market. Again, it peaked back here. It's making lower highs based on that trend line there, but you really need to see it take out this uptrend line to go on a lot further. So, all right, let's get away from that. You're either in it, not in it. If you want an update, let me know. Otherwise, I'll consider that one stopped out for the all intents and purposes. A couple other ones I wanted to update. I got a price alert today. We just hit a price target on THC. This one I shared as an official trade idea back here on the breakdown below this uptrend line, along with another one. I think it was it HCA? Either way, that one's good. I forget exactly where the entry price was now, but we hit that. We actually gapped down. Let's see where the open was today. Oh yeah, we opened down here. So again, any standing buy to cover limit orders would fill at the open, and that would be opened at 138.88. So that's a little bit below the actual target. So still have these additional targets. Anyways, just wanted to give you an update for anyone in there. So this is it. We're making a downtrend so far. We broke the primary trend line, and that's that. I think the other one, again, what did I say? HCA. That one, it already hit T2, but now it's below T2, and that opens the door. You know how you've heard me say this is why I list multiple targets. Upon the initial tag, each target odds for reaction are elevated. You get a reaction. Once hit, it opens the door. So you gap down below that level today. And again, this was laid out in advance after the breakdown of the wedge, and you can see I had a support level there, target of 370.19. I always say cover a little bit above the actual support level you're covering. We hit a low of 370.46. On a 370 point security, you're talking mere basis points. That's effectively a perfect tag, and that's it. So still calling these guys down to the 200-day moving averages, which come in and intersect with that T3 level. All right, let's go over a couple more that I've thrown out recently, trade ideas. We have the healthcare sector, which continues to walk lower. Today's, tech is up nice today. I'm going to get to tech in a minute, but you've been zigzagging lower since that breakdown there, and you're now below this uptrend line there. And then I had, those were kind of, unofficial, I call them trade ideas, thrown out in a video, and I also honed in on the biotechs and gave you some targets there. Biotechs, obviously a subsector of the healthcare sector. S1 hit, there was the breakdown sell signal, S2, second support level. That's because it was too shallow to be, in my opinion, a target. You could have used this one. And then a perfect back test. So, as of now, it's really, again, it hasn't hit the first target, but it's playing out so far. Big divergent high, sell signal with a breakdown. If you missed it, you could have shorted here on the back test, and we just need to take out S2, and that opens the door to these additional targets. I also gave you at the time IBB, same thing, divergent high, breakdown, working its way lower, and then PBE, and I think that one I gave you targets on as well. Yeah, I did. We already hit the first target there on PBE, and we're now cracking below it. So that's your update on the biotechs. Let's see. And while we're covering sectors of the S&P, let me just cover the other ones I've highlighted. I mean, I've covered them all, but as far as banks and the financials who just reported, remember they had that lift after earnings, which so far has been mostly faded. We've gone nowhere, so that's a stalemate. I'm not going to say that's bullish or bearish. It's the technical posture remains bearish, but unless we break that uptrend line, really can't do much with it there. That's XLF financials. XLU give you a trade idea with two entries, an aggressive alternative early entry there and or a break of the trend line. We hit that S1, we bounced out. I said that initial stop suggested was for the early trade, and then we took out the trend line, and so that one's still in play and not doing much. Basically all I see is a breakdown, and right now we're back testing the trend line after being back above it for one day there, and then we went back down on it and remained on it right there. So still looks good. Still like it. Not crazy about it, but it still looks good. XLK is the tech sector. We're going to get to the market in a second, and we're going to end with that because I see a lot out there, and that's why I'm doing a video. I started to mark up some charts for you, and I'm like, you know what, there's just enough. I want to convey all the salient levels to you guys, and you know, so I don't miss anything here. Takes forever to mark them all up in charts and try to explain, because there's some conditional things to watch. So this is XLK tech sector, just like the NASDAQ 100 peaked back here in July, early July, with a divergent high, bearish engulfing candle, followed by a break of the bearish rising wedge. We shorted it down from the high down to the low with impunity, covered that morning, went long, and this is just a full circle kind of move. You know, it's been a tech, especially, has been just a very swing tradable thing, and we're setting up for the next big leg down. I'm going to cover that more so when we get to QQQ here in a second, and the semis and everything else. Let me make sure I covered what I wanted to sector-wise. Yes, I did. Another trade idea I've been on a lot lately is UNG, natural gas. Still looking good. Nothing more to add. You know, on this most recent divergent low, moving up yesterday was an okay day for it, but in a big day. If you were in the futures, if you hadn't rolled yet and you're still in the, or yesterday at least, the November contracts, that's what I initially, let me grab that chart. Okay, so we had most recently, again, there's been numerous trades, entries, exits, but most recently was this divergent low here. We broke out there, we back tested, and then I was highlighting saying this would give you your next buy signal break above that 237 minor resistance. 2 days ago, day before yesterday, we hit it, went exactly to my next target where the arrow break was, 2442 right there, pulled back, and I covered this yesterday, right back. If you know, could have gained a little pullback, and that's over 1% or so. Natural gas is volatile. If you're an NG trader, I don't have to tell you, you know, you can get these quick moves on futures or leverage. Re-entry, if you shorted it on the pullback off 2442, or if you missed the breakout and then you had an objective entry on the back test, and then boom, we exploded from there. And I said next buy signal coming to break at 2442. Exploded high yesterday. It was up 10%, right at 10% at yesterday's highs. Pulled back a little, but look, we're still above 2442. That's how it works. So just like this, you know, breakout, pull back. So any pullback to 2442, or I've rolled, I told you yesterday, we have more volume coming into the Novembers now, or Decembers, I'm sorry, that was the November. This is a hourly chart. It's going to look a little bit different because I'm zoomed in now. Instead of 6 months, 2 hour candles like we were just looking at, this is hourly. But there's a comparable level right there that 2442. Remember, the price levels change. It's a different futures contract. This is the December. So it's kind of, if you will, for lack of a better word, natural gas traders guessing where the price of spot natural gas is going to be, you know, over a month from now. So that's how that works. It's that's why they call them futures. There's the uptrend line. I believe I mentioned yesterday. That was the kind of the breakout and pullback there, the reentry. And so this is it. You know, you can, you know, set very tight stop right there. But, you know, you also have to determine, you know, just like a lot of the things I'm covering, whether you want to play the short game or the long game. You know, I'm using the golf analogy. If you're a golfer, you know what I'm talking about. But in trading, you know, swing trading, I'm not talking shorting or going long. There's that too. It gets confusing. But I'm talking active trading, the short game. You're looking for quick, you know, relatively small price target. To me, a relatively small gain on natural gas is, you know, high single digits usually, or, you know, single digits, 5, 6, 3% sometimes, but 9, 10. The long game on natural gas, as I've covered many times in the past, is triple digits, and that's the norm for natural gas. You know, that's the trend you make in just a matter of months. We're not talking years, we're talking a matter of just months once you catch a trend, whether it's bullish or bearish. Again, I've highlighted that in long-term charts. So just wanted to give you that update there, that it's still constructive and still moving up. UNG, if you're a UNG trader, you're like, wait, Randy, you just said it went up, the Novembers went up 10%. That's the thing. UNG is an ETN that's doing their best. They're rolling. They probably rolled more forward to the Decembers already because of more volume there, and the December was up less than 10% yesterday. And even then, it was up more than UNG. You know, it's an ETN. It has its own expenses and all that, and that's one of many reasons why I prefer futures. But with that being said, I share it as a trade idea for those of you who don't have a futures account or don't know how to trade futures. And it's better than nothing. You're still going to catch the good trends. UNG is certainly can put some money in your pocket or take it away quickly too. So make sure you use stop losses commensurate with your risk tolerance. Take trades that mesh with your trading style and outlook for a security. Okay, let's just look at the semis real quick, and that'll kind of segue us into the stock market. So SOXX still looking good. I'm going to show you we do have a little bit divergence that just got put in right here. That's positive, aka bullish divergence. It's at T1. We already hit T1 once. Remember, we had a divergent high here, sell signals. That's my first target. These are still my second and third targets. Made a marginal new and still divergent high, and then broke the secondary trend line. But bottom line is this is much larger negative, or aka bearish divergence that's been building, at least right here at this point, than this divergent low. Now it gave us a bounce into resistance. But bigger picture too, you got to go to the daily chart, and semis peaked back, and again, I've been saying this in the past, you have to ask yourself, with the CHIPS Act, how much of that was already priced in to the semis? And now you've got all kinds of, what do they call it? Unintended consequences, with, for example, NVDA can't sell their latest chips to China because we're kind of at a quasi, war, tech war, trade war, whatever with China. But then China now is, of course, and in a lot of areas they're more advanced than us with technology. We still are the world's big, leading tech company. But China, they're resourceful, and they've turned full court press to making their own AI chips, and so ultimately okay, don't sell NVIDIA chips to them, and they're going to make their own. And then ultimately, how good is that for the U.S. chip company? And it's U.S. chip companies down the road. Either way, it doesn't matter. What does matter to me is the technicals, the charts. We had a breakdown, back test, divergent high, bearish engulfing candle. That was big support to me. Previous all-time high, breakout, successful back test right there, and then a failure, and then rejection. And so if this breaks out, that changes, and certainly if we take out that high. But as of now, we're kind of pinched between a rock and a hard place. That is support, very good long-term, very good long-term uptrend line support right here off the October 2022 lows. Very well defined. And then this level here, and that is a ascending triangle pattern drawn like that. So look, solid and sustained break above there, bullish, solid and sustained break below there, bearish, and lights out under 194.77 in my opinion. Also kind of taking a head and shoulders formation there. If you look at it, turn off all the levels. Again, you can see that would be your neckline there. Left shoulder, head, right shoulder. So what you want to see now, and this is, I'm also going to share a trading. I mean, look, we already have it as a short, but when I recognize what may be, these head and shoulders don't always play out. They're one of the most easily recognizable patterns. Everyone likes to jump on them. Again, I've talked about these quite a bit, even recently. What you want to see is volume confirming. You want to see increased volume off the right formation of the head, which you definitely have down there, and then off the formation of the right shoulder. And you don't have to have perfect symmetry. Right now, we have near perfect symmetry if we can get that right shoulder formed. So ideally, you don't always get what you want, but you look for a drop down to put in this right shoulder, and you want to see increasing volume on that to help confirm that. And then your trigger is a break of the neckline, which is right there. That's a slightly downward sloping, completely acceptable. Necklines are either horizontal, downward, or upward sloping. Again, so long as you have rough symmetry in the pattern. So again, it's a potential. Now, the takeaway is what I like to do when I see these, if it aligns with my longer term outlook. In other words, if I think ultimately we're going to go on to break down, you have the trend line break. It's a very, it's all about, it's just like Tesla, took a shot yesterday with a relatively tight stop. You miss, I always say, no, I'm saying it's not mine, I didn't make this up, but you miss 100% of the shots never taken, right? So you take a shot on a head and shoulders, and you now see that we've kind of turned, we have the potential to form, we haven't done it yet, but we have the potential to form a right shoulder. you take a shot with a stop somewhat above, because if they go up much more, if you get closer to the head, then you no longer have, it's not going to be a head and shoulders. Doesn't mean the stock can't then go on to break down the trend line and fall. It just means you no longer have a head and shoulders. So when I see them forming, and I think there's a good chance they can play out, and I've done this many times in the past and they've worked out, not all of them, but quite a few, I take the short there instead of the conventional trader is going to wait to see the pattern form and then short a break of the neckline, because that's the trigger of the pattern, right? You got to wait for the pattern to form. Well, that trader then has to wait, 17% drop before you even get to the neckline. Then they got to wait for the neckline to break. So to me, it's about, RR, quantify a smaller loss potential for much larger gain. I mean, you get ahead on that, and then if you draw out a head and shoulders pattern, let me just put the neckline in here for you and show you how you take the measured target. Again, you can look these up. I recommend you do. You have your neckline there, and then the measured target is the distance of the widest part between the head and the neckline. So you can go like this right there, or you can go on down here and angle it however you want. This is close enough. And then you add that to where it breaks down. So I'm just kind of going 5 steps ahead and assuming that we put in a right shoulder. Now your measured target's all the way down here. So it's a difference of short here, and let's just say that measured target's hit. That's a 41% profit, whereas the trader that waits for the neckline to break gets a 25% gain. So to me, everything's about RR. To risk a stop out of about 6% to make 40. That's a very nice RR. I'll take that any day, all day long. Even if the rate of success on that trade is going to be lower, because you're anticipating a lot of things. You're anticipating a chart pattern that it's not materialized yet. It's just potential. And then you're anticipating that it's going to break down and play out as such. But again, just sharing things that I've learned and kind of done over the years. So that's SOXX. Let's talk about the components there. You've got NVDA. It's got a big dog here. And again, giving you guys tight stops. They may or may not be my stops, or usually not. I tend to use wider stops. Myself personally tend to go closer to 1 RRs, but I'm giving everyone reasonable stops. I usually, as I told you on the official trades, I'm going to calculate using typically about 3 to 1 RRs, especially when there's no resistance. I like to tactically trade them. But as I've said and maintained, this one still looks good to me. That's not a good trend line, but NVIDIA is obviously the lead dog, and they're going to report after the majority of the semis. But the sector, again, this is like poor breadth, if you will. People speak of market breadth and they look at the indexes. They look at the S&P 500 mainly, because that's usually the only one that reports, or the NYSE. I've come up with my own breadth indicators based on sorting stocks in the NASDAQ. Well, I could take any sector, or like right now, for example, if I wanted to SOXX and tell you the breadth is 100% positive today, and they're all up. That's my real-time breadth indicator. But if you go to another sector, let's just pick randomly. Let's pick one, XLU, and I can sort it here. This is the percent up or down. I can tell you right now there's exactly in that ETF or that sector, there's 8 stocks positive versus subtract that, 23 positive right there. I'm sorry, negative, because there's 31 total in there. So that's my real-time breadth indicator. And again, one day doesn't make a trend. Obviously, if you see the semis up, 2% a day, and they're mostly going to be up. Okay. So on that, you know me, I'm big proponent of spreading bets, long, short, both equities. Just about at any point in time, I've got, if I'm engaged in the market, unless I'm completely engaged, going on vacation, stepping away from hurricanes or whatever, I'm going to be, have, some things scattered among there. I'm going to have long positions, long short positions. I'm going to have commodities, fixed income, different asset classes. And again, it's a kind of a hybrid of both my trading account and then long-term accounts. I have swing accounts, investment accounts, stuff, even the same position sometimes with different holding periods. I might be actively trading gold or silver, natural gas, long, short, in active trading account. I could be short at the moment, but then have a long position in another account. So because that's the trading plan for the, investing or trend trade, the longer term trades. But what I wanted to show you here is, so we're up, semis are up 2.12% today. But then we have still a long on Intel, and it's up 3.58. It's an example of being short. If you're short SOXX and long Intel, it's like I said, one of the most constructive, best RRs out there. It's offsetting that. Now we're still here. We're still consolidating. We took it here. I mean, took it here first, here and here. Hit 30, made the 30% profit. We got out. We bought back in here on the pullback. We hit T1 already. So, again, if it got stopped out tomorrow on a big drop here, is it a profitable or a loss? It depends on you. If you took out profits, you might have only been targeting T1. You might be targeting T2 or this potential to T3. Until I remove the reward potential, that's not my, the final target for, what I call an official trade. This is the final target. And that's, may pull the plug on that. But I think it makes sense as long as you're, until we get the sell signals on the market I'm about to get to be, let's just say, for example, to be short SOXX semis, it makes sense to have hedges. And you've probably heard me say this before if you followed me for a while. I personally don't care for the conventional. When people think of hedges, if you're long the S&P 500, you buy puts on the S&P 500. I don't really do that. It's a one-to-one offset, but then you lose because it's not a direct one-to-one offset because you have to pay the expenses on the options. It is a direct. I like indirect hedges. Quite often, as you know, I'll look at, for treasury bonds, for things that are correlated, whether they're inversely or positively correlated with the whatever it is I'm trading. I'll have quite often what I call an indirect hedge, like Intel. A long on Intel, in my opinion, is an indirect hedge to the semis. It's not a direct hedge, but you can be short the semis, and if they work out in a perfect world, and sometimes they do, semis will drop and Intel will go up. We've had that happen before. But right now, you can see it's offsetting. And then some, any losses today on a short on SOXX. So that's how the indirect hedges work. All righty. Next up, let's get to the markets. So SPY is an official trade. That was this is a 60-minute chart. Based it out here on the daily chart. That's the very day I got it out to you. I said, look, we're at support right now. You can bounce. And then recycle in at a higher level if that's what you want to do, and that is we're there. And if you look at the 60-minute chart, I have us back testing. This is that same trend line off the August 5th lows. This is the way I have it drawn on the 60 breakdown. That's also the chart I got out to you the other day. That was the zooming in here so you can see that support level 574.74 bounced. And now we're making a back test. So that is objective. However, I'm going to get to something. We also have a potential little downtrend line forming if we get rejected here. So I want to say it's objective, but the higher probability entry. And again, all day long, objective, add-on, re-entry if you game the bounce. But here's what I wanted to show you. You want to put the odds tremendously in your favor. Wait for QQQ and Apple. I'm going to get to Apple in a second. I'll share it as a trade idea for you. QQQ, the same trend line off the August 5th lows. Lots of reactions. I'm highlighting them all. When this goes, the odds of that SPY trade playing out, as well as QQQ going down, is going to go up significantly. The odds are going to spike through the roof. And so this is what, and I'd highly suggest you set a price alert on this. I think it's going to happen. I think it'll happen most likely soon based on the outlook here. You can see this orange line. I was doing this a few weeks back on the futures and other things. This was a divergent high back here at a bearish engulfing candle. We're still below it, But any equal or marginal new high, and again, marginal is a key word. If you go way up, what happens? The indicators pop up and they take out the divergence. But we've been building divergences for a long time. And again, it's not as if they haven't played out. Each new divergent high is played out for a correction. This was about a 16, 17% drop. We milked every penny of that. And even two of the counter trend bounces within there, the little one first and the second one there. So our net, I covered at the time, our net profit, if you took those trades, was greater than 17% or whatever the drop was. Then reverse long. Now, we didn't gain every pullback in here. I got in a little scaled in. No, is it here? Oh, God, I'm trying to remember. But we did. I highlighted some of these as objective reentries, long, short, long, short. So we batted not 1,000. We batted 1,000 on that. We batted probably 700 on the rest of this. And I just want to point out that, any equal or marginal new high anytime soon will not only be a divergent high, it'll be a much bigger extension of that divergence. So that makes this a powerful sell signal. So let me couple that with one more. So that's what it looks like on the daily. Just come in off the August 5th lows, catch that candle, those three candles right there. 1, 2, 3, the bottom of the August or September 6th, 7th. Is that the 7th or was it a week? It was a weekend. 9th. That's what I checked. And 11th. Those three, bottom of those three candles catch. And then the candle from the other day on Wednesday. And I would set a price alert there. You can do the same thing on the 60-minute chart. And it's nice and clean here. There's a 60-minute chart. Look at all these clean reactions, including this one just the other day. That's Wednesday's. Set a price alert there. The way it works, an immediate break, if it's impulsive, you go through there, you can certainly, that's your, an objective entry. If you want to wait for a solid 60-minute candlestick close below, it increases your odds a little better that you aren't not going to take a whipsaw, a brief move down through it, and even better on a daily close, right? So we're comfortably above it right now. But like I said, all we're doing here, and you can see I have divergent high. I already pre-drew this morning. It's already there. So now it's not just a potential. I had question marks. It is TH. Make it color it up white because now it matches it's just DH3 really is what it is. And so that's a 60-minute chart. Okay. So that trend line, if and when it breaks, and this goes back to that SPY trade, will significantly increase the odds that the S&P 500 short is going to play out. And then one more that you want to see go as well. This is a new trade idea for you. Apple. And this is the king right here. Beautiful, beautiful uptrend line right here off the April 2024 lows. This is a daily chart. Nice, clean, a lot of reactions on this trend line. We've hit it the last 3 days. We've been testing that trend line. They're buying it off there today. We had Apple put in a divergent high and what we call an island cluster top, 2 candles separated by gaps on both sides. That's a topping pattern. We've made an equal, pretty much effectively an equal but still divergent high. Look at the divergence here. We had negative divergence at that high right here. This was our divergence line. That was our bearish rising wedge. There was our sell signal. There was the biggest drop Apple had in months, if not years, at least over such a short period of time. That divergence didn't get reset or go away. It's only gotten much larger. You can see the slope of the divergence line steepening on the indicators, meaning the momentum has been slowing. And so going back to this point, again, this is if you were subscribing to the site leading up to this. This all segues into what I've been covering recently with my low volume indicator. I'm going to toggle over to that. But back then, leading up to that drop, which was, again, the biggest drop in the NASDAQ in, I don't know, a couple years, I warned of the, and I don't do this often. I don't actively market this site. I've long given up. I don't send out social media. I closed the YouTube channel. It's not public. I do this because I trade for a living. If I wanted to market the site, I could probably make 20 times what I'm making off the site. I just pays the bills, it pays for all the maintenance and the computer programming and the web hosting and all that stuff. So what I'm trying to say, I don't sell dramatics. I do talk about what I see coming down the road in the market and economy, and it might take a while. It doesn't look pretty. But as far as day to day, long, short, depending on what the charts are telling me. But rarely do I warn of a market crash, but I was doing that back then. And I still, like I said, I said, look, market word is strong. I don't, use, sensationalism, sell the site. But I do think the odds right now, for the first time, and I haven't said it since back then, and we got it, and you can see here, this is just a quick Google search on stock market crash. You can do the same, just plug in the dates, because remember the market bottom on August 5th. That's when we covered all our shorts and went long. U.S. stock market sees the biggest drop in nearly 2 years. Stock market, what's behind the crash? That's what that headline says. Why the stock market's freaking out. Black Monday, stock market crash, blah, blah, blah. So the media and everybody else was calling it a crash, and it's kind of predicted, and again, I wasn't predicting a 2008 financial crash, just a quick swoon down. I even gave you the levels where it would start to accelerate, and that was spot on, where we'd start to go down and then boom. And so again, we traded that one with impunity. What I'm saying now is I haven't talked about the risk for another quick crash type scenario, meaning just a very fast drop, one that most people feel like their heads get ripped off. I think it's coming again. This is Apple. There's my low volume indicator I've shared on the markets quite a bit recently. I've shared SPY, the S&P 500. So again, how to trade it? It's it. Set price alerts. You want the odds to go up in your favor. There's no 100% in trading. I wish I could tell you there was. The only, there are no, guarantees that any of this stuff will play out. But the odds go up significantly if and when QQQ solidly takes out that uptrend line off the August 5th lows, as well as Apple. And we already have SPY and Apple trend line. Yeah, there it is. That goes back also to April. In SPY, again, already broke down, but it was the first, and it caught support right there. At the same time, QQQ caught support. So they're both bouncing, and so this will increase the odds that we're going to go down. I'll just wrap here since I covered NVDA and the semis is large. SMCI, remember I highlighted recently, we broke this little, we've got the resistance zone right there. It broke that trend line, and you have the PPO rolling over, trying to testing the zero line from below. That tends to delineate bullish and bearish trends. Bullish when you're above, bearish when you're below. This was really trading on it right there. Well, actually below. If you want to look at it that way. And so then longer term, bigger picture, if you're bullish on this stock, you want to see the PPO cross back above. And that's when you want to be long and strong the stock. When it crosses below, like right there, you want to be short, as we were. And it's still on a longer term sell signal. And these are still my price targets. Target zone 1, which we reversed just off the top of. Price target zone 1, and then target zone 2. So the tone will probably be set, I don't know, well, remember it's NVIDIA sidekick, and NVIDIA doesn't report, this thing doesn't report till November 6th, NVIDIA doesn't report until November 20th, if SMCI even does report. Remember they delayed filing and all that, they had some accounting irregularities, thank you. NVIDIA, just want to point out as I'm on it now, that effectively an equal high, maybe ever so slightly high, still divergent high. And look at the PPO. Turn off all the lines right here. And what you want to see here is a bearish PPO crossover. I'm going to circle each and every one real quick. It's not on all stocks, but a lot of stocks it works as a great trend indicator. I'm going to circle this one because that was a whipsaw right here. Show you. If you just religiously traded off this, there was a bullish crossover. And so from the bullish crossover, all I'm looking at, guys, is the PPO line being above the signal line. That's meaning the blue line's your PPO line. There's the signal line. It was above there. You can also do this by just putting up a PPO histogram, and it's going to show you when the PPO line's above the signal line, the histogram's green, and that's it. So look how simple this is. Long and strong. Correction. It was a whipsaw. You know, by the time if you took the signal, you would have made a little bit, but then if you waited for flip back to green. Here it was bearish. Doesn't look like much, but that was probably double-digit drop. I'm sure of it. That was well into the double-digit gain. Green, right, long and strong. Red, bearish crossover. It told you, stay short. Bullish crossover. We've been trading this stock, batting probably 800 on this one so far. Bearish crossover right here. Histogram was red. Green, long and strong, and it's getting close. It hasn't crossed yet, so watch for that bearish crossover, but not in itself. I never trade on that only. You want to look at other things in conjunction, and I wish I could draw a better trend line right now. I can't draw a great one here. It's just kind of been erratic, so I'm going to leave that off. These are, again, just near-term targets. If you get that trend change, focus on the long-term targets I gave you way back here. It was, it was on June 26th. We already hit that first target right here, covered it. We went long, covered our short. Had a few in and outs there, but these remain the longer term price targets right there. Oh, T4 is still the final target. All right. And then this is our bull market secular uptrend line right here, or more cyclical actually. This is a cyclical bull market uptrend line right there. So when that goes, we already hit T1, so we could have another reaction around there or not. We'll probably go down to T2. And then if that happens too, we're going to be below the 200-day moving averages, and that's going to increase the odds that we're going to go all the way down to my fourth target. Okay, I will wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great